everybody, Adam Harris here. So let's have a look at the economic calendar for this coming week. So first of all, yes, there's a holiday out of New Zealand. We've got a lot of US dollar news and some euro news. Now, I would keep an eye on this ECB interest rate decision. That looks to be fine, but we can get some volatility around that. But I would say that the big concern for me is going to be this interest rate decision. There's a potential rate cut plan. Now we know that the Fed was opposed to doing this at all. If anything, to curb inflation or inflationary concerns, they should be doing rate hikes. And they've actually already done a rate cut, and they've got another one scheduled. This is historically what often leads to a market crash down the line. This is exactly what happened in 2007. So there are some concerns here. So let me just sum them up for you. Rate cuts kind of signal a cooling labor market. That means job growth is down to 29,000 per month, raising obviously recession fears, right? If the underlying issues such as weak consumer spending persists, we've got inflationary risk. CPI is at 3.1 and core inflation at 2.7 to 3%, suggesting kind of cutting rates could just fuel that demand, entrenching sort of price pressures in services and housing. And then, of course, data uncertainty. So the government's still in shutdown. And as I said before, I think that Republicans will do it for as long as they possibly can for several reasons. One is they don't historically like to govern. Two, they like to destabilize the government because that gives them an excuse to justify why they should step in to solve it. So ironically, they like to cause problems, make the government look terrible, and then make it look like they are the solution, but they never really bring solutions. Historically, this has not been the case. And really, they also see it as a potential power move. But the end result here is that Americans are going to suffer. There's going to be a lot of damage done, especially as there's a lot of things on the chopping block that they want to remove, and they keep wanting to blame Democrats for this, when in fact they're in charge of all three of the government branches, and this is completely within their control to fix. So look, the thing is that it's also they're not releasing data. The data is becoming more and more opaque, and they really don't want it to look good, look bad for them. So there's a whole lot of stuff going on there. So misinformation is also a risk. Again, markets are expecting more cuts, but a less kind of dovish Fed stance could spark sell-offs in the markets. So here's the thing, right? Rate cuts often stimulate the markets, and right now the stock markets are climbing and doing very well. But at some point, if the markets get nervous that the data isn't accurate and they can't trust it, and rate cuts are really not there because the economy is doing okay, it's going to ultimately cause a market crash down the line, whether that's 6 months from now, 3 months from now, a year from now. But it is going to ultimately destabilize the markets and increase distrust in it. So also there's internal conflicts. So there's just more and more kind of dissent in amongst the FOMC, which will increase uncertainty, and it's meant to be independent. And then, of course, now we've also got like rising bank loan losses in the US, and there's other more red flags starting to creep in. So it implies that the US markets are weakening. But the thing is, they've got a lot of tools at their disposal, and there's still a lot of faith that the Fed will step in if there's any concerns. And so we could continue to see the markets climb, as I said, for up to even another year. The whole of 2026 could just be super bullish. And we're heading into what is historically a seasonal bullish period. So it's a mixture of both, but I'm just pointing out here where my concerns lie. And this is not a good thing. If the markets are doing well, there is just no reason to do rate cuts. Number one, especially if inflation is rising. Okay, if inflation is going up, if costs are going up, you have to hike rates, not cut them. Anyway, that being said, let's go to the markets. Let's see what's going on. All right. So here we are, we're looking at the VIX. Key thing here is right now, currently, this week, the market is still calm and happy. All right, volatility or fear index, still fine, very happy. The dollar index is still stuck within a range. It is leaning a little bullish. It is testing the upper limits, but it is still stuck within the range. If we have a look at euro dollar, you can see here euro dollar is still stuck within a range. So what does this mean? It just means that for day traders, there might be very short-term opportunities that you can grab, but there's nothing to sink your teeth into, nothing that lasts any longer. We look at GBP, it's slightly weaker at the moment, kind of coming down to test support. That support could very well hold if this indecision continues. Then we have a look at Aussie dollar as well. You can just see very much just range bound. So if you're wondering why this is the tariffs have impacted currencies, forex markets more than anything else, because that's obviously where a lot of trade happens between different countries. We've got Kiwi dollar. Now, what's interesting to me is the Kiwi has been one of the few majors that has been moving. It's coming back up to test resistance, which is previous support. And actually, it's very choppy. For day traders, that's horrible. But we could see a swing low. We could see a swing high. I beg your pardon. We could see a swing trading opportunity to the downside here. So something to watch this week. Dollar Sussy, just garbage, really. Not doing anything. Let me just mark that range. Really not a lot happening here. So something to stay away from, which is funny because a lot of the Swissy pairs are just continually heading lower. We've got dollar CAD also creeping up a little bit. But again, some of these trends are almost just sliding. There's no real structure to them. Just something to be cautious of. Look at these outside candles and indecision. It's just directly 100% due to tariffs. Again, here we have a look at dollar yen. So dollar yen, certainly out of the majors, one of the strongest moves at the moment, continuing to move higher. And you can see here on that weekly a nice little uptrend. I beg your pardon, here on the weekly, nice little uptrend, but also on that monthly. And we're starting to head back up towards that 157 level. So if you quickly look at all the yen pairs, you can see largely really good trends for day traders. So here, for example, if we go down to, let's just say, the 2-hour time frame, you can see a relatively strong trend. If we're going to have a look at the 4 hours, so this is for day traders. Any kind of pullback here for me would present buying opportunities, but just look at that, just kind of overextended. But again, kind of going ahead and let's have a look at Swiss yen as well. Swiss yen also pulling back here. So there are some really good trends, but I would say also more on the yen crosses than anything else. Where we go, there we go. So liking that look. Any pullbacks for me are buying opportunities. Interestingly, Kiwi Swissy also having a potential setup here. Very nice trend. Pull back into the moving averages. Nice exhaustion showing in here. I think a break of the low here. Could see a move down. There's some strong support at this level at 0.4500, and it is a little bit overextended on the monthly, possibly on the weekly wanting to pull back up. But yeah, there could be one more little bit of a move before it starts to flatten out. Let's have a quick look at gold. So gold, this is an interesting dilemma. We've got this very strong rejection on the weekly. Twin rejection there, which is historically kind of like a double top. We produced this bearish indecision candle. So this is what it's going to be about this week. You have got traders wondering whether the daily has pulled back enough and the daily is now ready to take another run at the high. Certainly that's going to be a barrier to get through, or whether we break the low of the weekly and we start to pull back on the weekly. So overall, I still think the weekly trend is nice and healthy. We just do need a pullback at some point. There's a nice 4,000 level there as well. So let's just put that in. Nice little 4,000 level there. And so essentially, that's what I think we're going to see this week is, do we break lower? Do we come down towards the 3,800? Or do we ultimately break high and take another run at the highs? That is something that unfortunately is impossible to tell at this point in time. And because the battle's actually going on. That's what's going on here. You can see a lot of bulls thinking that this is it. It's going to keep going. And some people saying, no, we need to let off a bit more of that buying pressure. It's the same for silver. Silver has had a bit of a healthier pullback. All right, it's down towards that $45 mark, but it's got the same battle going on here. You can see that indecision, and essentially that is just a question of, are there enough buyers to pick this up and take it back up, resume that daily uptrend, or do we need to let off a little bit steam for another 1 or 2 weeks before we then pick up and keep going? Overall, I do think the trends are healthy, but we do need a weekly pullback at some point, and eventually we're going to need a monthly pullback at some point. And so that is really the battle this week. So just keep an eye on that, exercise some caution there. Let's have a quick look at crude oils. Let's have a look at light crude oil. I like this. I love the fact that we've pulled back in. We've tested it at this level of support as resistance, and we're testing it again. We've got a small bearish candle here, and we've got a nice little bit of room to move down towards these levels here. This could very well turn out to be a very nice move this week, potentially. So something to think about. Then let's have a look at some of these other metals here. Very quickly, want to have a look at palladium. Just generally, as I said, most of them are generally bullish. We've got platinum as well, also putting back into those moving averages. Let's have a look at copper. Okay, so copper still has some nice little upside potential there. Okay, fine. Let's move on and have a look at the global indices. So long story short, the global indices continue to be bullish. We continue to create all-time highs. Overall, daily looks really nice. I'm not too concerned at this time. I mean, we have other concerns, but technically the markets are not really showing any signs of stopping anytime soon. To me, the most interesting part of the non-US markets, because they continue to break highs. So one of the things I like here, for example, is just taking the S&P here, is going down to the lower time frames, having a look at, say, the 4-hour. And the 4-hour for me could provide some really nice pullbacks, buying opportunities. If we find some support here, there's some good spots in this area here to look for some buying opportunities there. And actually that shows itself across quite a few of the charts. We have a look at the NASDAQ. NASDAQ as well, technically also looking really good. That daily looks nice and healthy. That weekly looks particularly good. The monthly doesn't look that overextended. Ladies and gents, the markets technically are super bullish at the moment. Let's have a look at Russell 2000 again. I like this one because it's had a bit of a battle for a while, and it is starting to approach those highs, those all-time highs, and it's very happy. The quality of the trend to the upside right now seems to be spreading, obviously, from a lot of the markets. That is both a mixture of bullishness, but also potentially now the market's becoming a bit saturated in certain areas. The FTSE here, just having one of its best run in almost decades, just incredibly strong moves to the upside. To me, again, any pullbacks here represent some good buying opportunities. The structure is well behaved, it's geometric, and it is behaving in a highly predictable fashion. We can get rid of these things now. We had a nice, this one highlighting the consolidation. That looks good. And again, we've got this now. We had a nice old consolidation and a breakout and a pullback, and the markets continue to resume. The DAX, even here, coming up and testing these highs, it's looking very good on that monthly. Nice consolidation. It's had a good run. It's had a bit of a break. Now I'm looking for this to break out and head higher. Let's have a look at the French CAC, for example, which is not the prettiest of charts, but look at it breaking up through these new highs. Just loving it. The market's, again, looking pretty nice and bullish. We've got Euro stocks. Again, let's just go through this. I want you to see this with your own eyes. Beautiful. Look at that. Really nice, decent pullback, indecision, bullish candle off those moving averages on the weekly, testing support, and there we go, pushing higher. The Nikkei, big fan of course, look at the quality of this trend, and also starting to go almost parabolic, so very, very bullish, and at some point we will get a big correction, but for now, the weekly also not looking too bad, not seeing too much divergence. I think we'll probably slow down in this area just for fun. Why don't we just mark this area to see if we're going to have any concerns about here? But somewhere in this area, probably around that 50,000 mark, we might find we start to slow down a bit. So I will just leave this, and let's just see what happens. So what I'm doing, I'm just going to mark this with today's date, and then, because I often find I put a marker on the thing and I forget why I put it there or when I put it there, so I'm just doing that here to see if we do start to slow down in this area, and that would really just be because the monthly and the weekly become a little bit too overextended, and at some point they are going to need a correction. All right, let's have a look at the ASX Australia as well. Also, still to my mind looking relatively good, but definitely starting to slow down here as it does. So again, it takes a while for the markets to slow down, and currently they are still looking quite bullish. And I think, again, the US has got a lot of tools at its disposal to keep juicing the market. But I'm exercising caution, making sure that I reduce my exposure across the board. And as I said, this could take a long time to play out. So I don't think it's something that's necessarily going to happen overnight. And I also don't think it'll necessarily kick off until we see what happens with inflation. So right now, what's going to happen is there's this race to keep the market going higher before inflation becomes too much of a problem. When the inflation does ultimately, and consumer spending starts to slim, starts to contract, and we get inflation becomes out of control, they're going to have to do a rate hike, and that is going to trigger a massive market correction. So it's a race now. How much can the markets keep going up before that becomes an ultimatum? Let's have a quick look at Tesla, just because I always do. Again, it's back up at these highs here. It's kind of got a 5-6 month thing going on there. Sorry, I beg your pardon, 5-6 week thing going on. It's sitting at highs over here. It may very well wait a little bit longer for the weekly to catch up before pushing on higher. It's not necessarily, just technically here, it's just going through a bit of a consolidation. Let's have another look at, for example, at Apple. Apple continues to break highs. So the only reason those two are here is just because they're good, well-known brands. They're well-known brands. They still look really nice, breaking onto new highs. For the most part, these are looking very good. I'll tell you what I'm going to do. I'm going to quickly add Google and Netflix and a few others to this, and let's just quickly include them and have a look. We're only going to go for another minute or two anyway. Okay, so let's have a look at these ones. For example, NVIDIA, right? NVIDIA, it's okay, but it's not going at the same rate at the moment. It's starting to consolidate. That's a nice bullish candle, and I do think it's going to attempt to break higher, but it's got a little bit of resistance that has to break through. Overall, is it bullish? Yeah, but it's definitely starting to diverge, and it could very well just go into a consolidation period. I think, big picture, I think it's still bullish, but it hasn't got the same speed right now. It's not going up at the same speed. Meta looking very nice here. So there is, of course, a very strong level of support. Nice monthly candle here. This could ultimately actually represent a bit of a buying opportunity. There's a little bit of a double top over there as well, so let's keep an eye on that. But keeping it nice and simple for the most part, I think this is going to continue high. I'm going to keep an eye on this. And then we'll finish off. Let's have a look at Google. So this is Alphabet. You can see very nice. It's had an incredible run. Starting to go a bit parabolic again also. So when that correction does come on there, it'll be a nice buying opportunity. But a little bit of of divergence here, a nice little level there with a breakout here for the most part. Again, these are still looking nice and bullish. So I think 260, and I think we could find ourselves up to 270, 275 for now. Again, so the bullish remains in the markets. Bitcoin, let's have a look at that. So again, Bitcoin sideways, nice bullish consolidation. Nice monthly consolidation here, and I think we will ultimately break up through this level. There's a really thing, it just can't seem to quite close above that. But I'm thinking here we're going to see this move higher if we break, especially above the high that weekly candle. I think we could see it potentially this week. We'll see how much this 116 level, if that's an issue. But otherwise, I'm thinking this week we'll see it push back up to those highs. Ethereum itself, without even having to look at it, I was looking at Bitcoin, I could tell you Ethereum is going to look nice and bullish. So again, here we've got a bit of a bull flag. I think a break above here, we could see this start to push back up. The only question really is it going to get to the top within 1 week, or is it going to take a bit longer than that? So ladies and gents, let's sum stuff up quickly. Let's just do a quick recap. Some of those currency pairs are looking good, but if you're wondering why FX is not great at the moment, it's 100% tied to tariffs and indecision and cautiousness. We've got silver and gold have to make a bit of a decision this week as to what they're going to do. They're just trying to take a bit of a breather and possibly let off some of that buying pressure. And we have a look at the markets. Again, for the most part, not that we're not saying there won't be a correction at some point and the bill isn't going to come due, but right now the markets are not, the indices and the global markets are not concerned about that. So let's see how the week plays out, ladies and gents. Let's see if there's any surprises or unexpected things that crop up. So again, risk management is everything, and monitoring your exposure, and keep calm and carry on trading. Thank you.